Thank you for joining us for episode 96 of Northstar's Private Equity Fast Pitch. Our host, Jeff Henningsen, president of Lockton Companies in Houston, will be speaking with Gina Luna, a managing partner and founding partner at GP Capital. In 2016, Gina founded Luna Strategies, where she counseled companies and their leaders on complex strategic issues and growth initiatives. Gina is a member of the board of the Federal Reserve Bank of Dallas, Houston branch, and St. Luke's Health System. She serves as a trustee of the Texas A&M Foundation, the Welch Foundation, the Welch Institute for Advanced Materials, and Baylor College of Medicine. She was elected chairman of the Greater Houston Partnership in 2015 and continues to serve on the board and executive committee. Today they'll discuss how do you build a localized, thriving, innovative ecosystem, why a career sponsor is possibly more critical than a mentor, and finally, why she recommends taking the most difficult tasks on early in your career. And now your host, the podfather of private equity, Jeff Henningsen.
I'm super excited that we're recording our podcast today. Why don't you spend a few minutes, let the audience know who you are and a little bit about your firm.
Thank you. I'm so happy to be here. Appreciate the opportunity. I am Gina Luna, and I am one of the 4 managing partners of GP Capital Partners, which is an SBIC fund on the Genesis Park platform. I've been in Houston for about 25 years in the business community, and we put together our fund in 2021, closed the fund late last year, and are now in the process of deploying the capital. And GP Capital Partners is an SBIC fund focused on making debt and equity investments in lower middle market companies in the Gulf Coast region and the southern U.S., primarily in Texas.
And you said SBIC fund, and I think you may be the first representative that I've had as a podcast guest. Tell me a little bit about what that means, because I think that's going to be a new term for some of our listeners.
Sure. SBIC is Small Business Investment Corporation, is a program under the Small Business Administration. And it's quite different than what people typically think of as a SBA loan that they get from their bank. And under this program, a division in the SBA actually issues licenses to groups of investors after submitting a business plan outlining a very specific strategy. They do a lot of background work and credibility checking to make sure that you're not only a credible group of investors with a track record, but that you're aligned with the priorities of the SBA, which is, of course, helping small and medium-sized businesses grow and create employment and economic impact. It's an application process that typically takes 12 to 14 months. It's quite extensive because if you think about it, the way this is structured, it's almost as if the SBA is one of your LPs in your fund. More specifically, a fund would raise a pool of private capital. In our case, we raised $100 million of private capital from LPs. And then you can leverage that 2-to-1 up to $175 million with SBA debentures. So our fund size is $275 million. $100 million of that is private capital, just like you'd think would go into a traditional private equity fund. The other $175 million is 10-year fixed rate debentures. And then through this program, we invest in small and middle market size businesses. There's not a lot of requirements other than they be domestically headquartered businesses. The vast majority of the employee base is in the US, and of course that they fit that fairly broad definition of a small business. Different SBIC funds are structured differently. Ours is primarily a debt fund. So at the portfolio level, we will be 70 to 80% debt and 20 to 30% minority equity investments that we make alongside our debt investments. And as it relates to the credit piece, we do everything from senior secured all the way to true mezzanine debt with warrant. I think the really unique positioning of this fund is we have tremendous flexibility to think about what is the right capital structure for any company and, given the situation or the opportunity they're facing. And we can, with that debt and equity capability, generally, we may be the only institutional capital provider for that company.
I know you said that there's not a lot of restrictions on where you invest, it needs to be domestic. Is there a particular, for your fund, industry, size, any dynamics at a target that you're specifically honed in on?
Certainly size. We think of our sweet spot of companies with 2 to 10 in EBITDA. Again, those are not real hard lines, but that's a pretty good indicator of where we like to focus. We are more industry opportunistic is the way I would say it. There's a host of things that we don't do. We don't take commodity risk. We don't finance another finance company. We don't do real estate or project finance. But beyond that, we can look at almost anything. Where we tend to focus because of our backgrounds and our relationships and the geography in which we operate. We love business services, industrial services, manufacturing, media, telecom, leasing and distribution kinds of businesses. Not unlike my days in banking, it's those kind of core industries that make the world go round in Texas for sure.
I think outside of Houston, maybe not, but I think outside of Houston, Genesis Park is probably a little bit under the radar. Can you give a little background on the overarching team and a little color there? People will find that interesting and maybe blend in what attracted you to joining this group.
Genesis Park was actually founded in the late 90s by Paul Hobby, Peter Shaper, and Steve Gibson. Since then, they've had a couple of more traditional control equity, private equity funds where they did buyouts again of mostly lower middle market companies. And they've done also some things outside the fund. But the second of those funds was fully invested late last year. I guess we really started the conversation in earnest about an SBIC fund kind of mid to late 2020. We always talk about it. It was born in the pandemic. Over the years, Peter and Paul, with their control equity fund, always thought it would be interesting and useful to have a debt vehicle alongside that fund because not every company that they saw that they were really interested in needed the full Monty of control equity and buyout. And in 2020, I had worked with them a number of times over the year, looking at portfolio companies, helping them with a host of things, referring investments their way. We started talking about this more seriously, and somewhere along the way, brought Curtis Hartman into the conversation after he had left Main Street, where he was for about 20 years. He has tremendous experience with the SBIC and with these funds. He was a great addition to the conversation and ultimately to the partnership. In late 2020, we decided that the timing seemed appropriate not to make a credit vehicle kind of a sidecar to a control equity fund, but given the environment and the amount of just private equity capital in the market, that maybe having a fund that was more debt focused was really the opportunity at this point in time, allowing us to be up the balance sheet from a risk perspective, but with the SBIC leverage, really still able to create a private equity type return. And as we fast forward and where we are in the market, I think that's true. We do find that to be a real differentiator in that there are a lot of founders, owners, entrepreneurs that need some growth capital, but are not ready to sell control of their company. This is a really nice alternative for them to maintain control of the business, get that capital that they need, and have a nice value-added strategic partner that can help them with issues and opportunities beyond just the capital. We went through the process. We filed our application in November of 2020. We received our license on September 30th of 2021. So we feel like that was a land speed record, although it doesn't sound that way. It's a long and sometimes painful process. In the meantime, we had raised all our private capital. Really starting in the fourth quarter of last year, we were off to the races and ready to start looking at investments and deploying capital. And we closed our first investment in December. And now are working through a fairly healthy pipeline of new deals, a couple that we expect to close within the next few weeks.
We're going to get into your background in a minute, but I think the SBIC is still going to be a little bit interesting for some of our guests to understand more, because it seems like maybe not free money, but it seems like something everybody would want to do. What makes it so difficult? What are the, if you will, strings attached that people need to understand?
It's funny that you say that, because when I first started learning about an SBIC, I was reading the top line and I kept thinking, just like you said, why wouldn't everybody do this? 2 years later, I recognize why not everybody does it. And first of all, because the licensing process is rigorous, it's lengthy, it's expensive to get through the process. And frankly, there are some requirements, like you have to have a track record of investing. You have to have some consistency of the people that involve. So you typically wouldn't be able to just gather up 4 of your friends and say, hey, let's go do this, because you haven't had a track record of working together and investing together. So there's some continuity that's required, and certainly a track record and a very extensive due diligence process by the government. One, not everyone is willing to go through that process, but secondly, not everyone passes all of those hurdles. It takes some patience because it is a 12 to 14 month process. And then beyond that, we have all the latitude in terms of making our own investment decisions. The SBA is not at all involved in our individual investment decisions, but we do have some reporting responsibility back to them. There is an additional compliance and regulatory burden that goes along with a fund like this. And then the SBA exists for a reason, and that's to promote the growth and development of businesses of a certain size in the U.S. And they do that because they want to create employment and economic development in the communities. Your fund needs to be aligned with those priorities. That's easy for us. We very much are similarly focused. It's been great for us. We're thrilled to have passed the bar and been able to get the license, and think that we can do a lot of good with this capital. It's not easy.
You mentioned Curtis Hartman earlier, and I've known Curtis, I don't even know, maybe 20 years. I just love Curtis and his wife, Amy. He was really, in my opinion, one of your secret weapons. And I think you even shared before we started talking that you really didn't say yes until you knew Curtis was also going to say yes. Talk about his role, which obviously brings a lot of credibility to the group.
It does. And you're exactly right. Curtis and I laugh all the time that we had these parallel careers in Houston in the business community and did not know each other until we came together in this endeavor. It's really amazing that that's the case, but he does have a great track record as an investor, as an organizational leader, and was very, very involved in the Small Business Investor Alliance, the SBIA. He served as the chairman of that organization. I think it was in 2018 or 2019. Has been a very influential leader, not just in Main Street as a company, but in the industry. And he brought to this group the most relevant experience in dealing with this kind of program. I'd obviously operated in a regulated environment inside a big global commercial bank. Peter and Paul had this equity investor background, to be sure, but there's something to be said for having someone on the team who's been around the block and done this before. And Curtis certainly brings that expertise and experience to our team. And it's just great to have him and to work with him.
Well, and you mentioned your background at a global bank, and we haven't really talked about that. Why don't we dive back as far as you want to go, but talk a little bit about your career path, maybe even a little bit college, and how you progressed to where you are today.
I went to A&M, and between my junior and senior year college, I did an internship at Texas Commerce Bank and loved it, had a great experience. It's funny because I got an offer at the end of the summer to come back as a full-time analyst kind of in the bank training program. And interestingly, I didn't accept it right away because I was so wise at the age of 20 or 21 or whatever I was that I thought, surely you're not supposed to accept the first job you're ever offered. So I went back to school my senior year and did all the interviewing and office visiting, and ultimately decided that it was a great opportunity for me. And I did accept. And then I spent 22 years within that organization as it went through many bank mergers, ultimately to be JPMorgan Chase. It was an incredible experience for me. I had the opportunity to have many different kinds of career experiences within the same organization, everything from commercial and investment banking to serving as the chief marketing officer of the commercial banking business across the country. And then ultimately, the last 7 years I was there, I was running the commercial banking business for this region and serving as the chairman of the market, which allowed me the opportunity to focus on these middle market companies and working with founders and owners that I find to be so interesting. And I also was able to have a broader kind of business community leadership position because of my role within JPMorgan. And that's where I got involved with things like the Greater Houston Partnership and other larger civic organizations dealing with issues and opportunities specific to Houston and the region. And through that, worked on things like Upskill Houston and Houston Exponential, all of which, I think are broader things that hopefully make our community better and more opportunistic for more people.
I think it's interesting when we're prepping for the call, you talked about your role and one of your passions that you took the tip of the spear on at the Greater Houston Partnership, focused on bringing early stage companies to Houston. Can you talk a little bit about that?
I chaired the partnership in 2015, actually right after Paul chaired it in 2014. And it was in the context of a conversation right when I was becoming the chair of the partnership. Blair Guru, who is now at Mercury Fund, he and I were talking on a YPO trip, and he said, the partnership is neutral at best as it relates to supporting the innovation ecosystem in Houston. And I was like, what do you even mean? What's an innovation ecosystem? And what does that mean? And so we started talking about it. I pretty quickly realized that he was right. It was not an area that the partnership had really focused a lot of effort and resources on. And it became apparent that we as a community had some real gap. That started as a conversation, let's get the right people around the table. It turned into something a little more structured, a task force, and then we joined working together with a task force that the mayor had created, and it became a real effort. And we put a lot of time and energy and resources around developing a strategy to say, what are our gaps in Houston as it relates to fostering, attracting, and really helping develop early stage technology and innovation companies? And most importantly, what do we need to do to make sure that they stay here and grow up here and create that economic benefit that you get when they go public or they sell, or they create hundreds of wealthy individuals when an exit happens? We developed a plan that we started implementing quite deliberately, I'd say in 2017, and formed what is now Houston Exponential as a separate entity. The intention was really to have a group of people who wake up every day focused on this effort around helping these companies, but also attracting more early stage capital, venture, seed capital, to support them so that they can stay in Houston as they grow up. One of the, I think, most impactful results of that was the HX Venture Fund, which is now on actually Fund 2 and is proving to be very successful in bringing some of the most strategic and visible capital from venture capital firms all over the US to invest in companies in Houston and to really help them grow while they stay here. And I feel like the time we were launching that, we said it would take at least 5 years. And 5 years later, we're really starting to see the impact of it. Still lots of work to do, and it's something we have to continue to focus on.
One of the things that I just love when we've talked feeling is just your passion for mentorship and growing businesses and growing people. Why don't you spend a little time talking about mentorship? Has there been anybody that played an instrumental role in your career? You moved around a little bit at JPMorgan. There had to be somebody that guided that path or at least helped you in that world. Maybe some advice for college students, young professionals. Not only, I'm sure people are coming to you all the time saying, hey, what would you do if you were in my shoes? Blend something like that in there would be great.
I think of mentor more as a verb than a noun. I think mentoring is something that you seek and gain from many different relationships. I've never really looked at a single person and said, that's my mentor. But I certainly have gained a lot of great advice, direction, support from a host of different people that have supported me and helped me in many different areas. I mean, I have a great friend who I always said was the best mentor to a working mom, because she had kids who were a few years ahead of mine, and she always just had the best advice about keeping the right perspective on your career and your family. And so I always think of her in that very special way. And other people I think of as mentors who've helped me think about leadership in the community or pursuing different opportunities in my career. But really importantly, within JPMorgan, and even since I've left JPMorgan, I've had a few people who I would call sponsors versus mentors. And to me, the distinction is a sponsor is a person who has the power to influence your career, to advocate on your behalf, to speak for you, if you will, when you're not in the room. And I feel like that's a person who puts their own personal credibility on the line to help something happen for you. And I have had a few people in my career that helped me in a number of ways. First of all, I find that these are the people who always see my capability far beyond what I do. And so often I've borrowed some confidence from them, thinking, well, if he thinks I can do this, then I guess I can, and I'll figure out how. But also just being the person to say, this is the individual that should get this opportunity. And I support them in that way. And I know that many times I have had great opportunities to do roles maybe that I wouldn't have necessarily put myself up for, because a person like that advocated for me. And so I've had a handful of those, and that's a very important relationship, and one that I think develops organically. I don't think you can force or magically create that sponsorship. I think it's someone who really takes an interest in you, and then you continue to prove them right, so they're more and more comfortable supporting and advocating you. In the last many years, I feel like I've also had the opportunity to serve in that capacity for other people. I find that to be very rewarding. So if I were to take all that and turn it into advice for people earlier in their career, I would say focus on building great relationships, mutually beneficial relationships, authentic relationships, and don't worry so much about what you're going to get out of those relationships in terms of mentoring or sponsorship. That comes naturally and will develop as it can. Once you try to create that or force it, it turns into something less effective and maybe less impactful.
I think that successful people tend to notice the rising stars more than the rising stars realize that they notice them. And if you're a rising star going to somebody, or if you're not a rising star and saying, hey, will you be my mentor, is probably not the right way to do it. It seems like in my life and other people like you that I know, you tend to notice the folks that are putting in a little bit of extra work. They're thinking thoughtfully. They're coming to you with ideas. They're coming to you with opportunities. And that's really where you identify that person that you want to sponsor, right?
Well, it's so true. And I've often told people that, what I've found in my career is you get those opportunities if you can position yourself to be someone's solution rather than someone's problem. Anytime when I was at JPMorgan, if there was a big, hairy problem or an incredible opportunity, I wanted to be the person that they wanted to work on it and would get the call to say, can you lead this project? And oftentimes, honestly, that was like the project that was the least fun and the most work, but turned into great opportunities because you addressed a need, you solved a problem, you were somebody's solution rather than somebody's problem. And that leads to the next great opportunities. I think your point is well taken.
I haven't asked you yet, but this seems like a perfect time to dovetail into one of my favorite questions that I always clip and put together a montage in January of every year. But do you have any favorite quotes, mottos, or really what are you passionate about? What gets you up in the morning and gets you excited to get going?
I am excited every morning to get up, and I'm thankful that that's the case, and feel like there's always more interesting things to work on than time in the day. And that's a very fortunate position to be in. Oh, I love quotes and mottos, but I always start with just a grateful attitude, I think, and really stepping back to recognize and see the world as possibilities and opportunities rather than problems, and think about how you can be a part of the solution. And I think back to Jamie Dimon once talking, and he said, leadership is not just an opportunity, it's an obligation. And if you have the ability to impact and lead in a positive way, you have the obligation to do that. And so that often drives me to think about, what can I do to be more helpful, whether it's inside my organization or in the community or with the businesses that we're working with. And if you have the ability to do that, it's such a privilege to be able to do it.
Share with the audience about your family, because I know you have two boys that are very involved in baseball, and juggling careers and family and doing that all as eloquently as you have is very impressive. How do you do that? And tell us a little bit about that part of your life.
Thank you. Well, you're nice to say it's eloquent. You don't always see how the sausage is made, right? I am married to Carl, and interestingly, we met at Texas Commerce Bank and worked together there for many years. He left the organization a long time before I did, and Carl was a CFO of a public company and now is a partner in a private equity firm. We're fortunate to have grown up together in two careers, always working together, each of us in different kinds of roles along the way. And we have two boys, 19-year-old college freshman and a 16-year-old sophomore in high school. And as you said, both are serious baseball players, one playing in college, one playing in high school, and both playing all over the country all the time. And we love that. My kids and my family have always been every bit as important to me and as much of a priority as my career. And I've just been fortunate to be able to have great partnership and resources around me during different points of my career to be able to make that all work. And for me, the secret sauce, I think, is being really organized and planning ahead and putting everything on the calendar and putting family obligations or events on the calendar in the same way I do business meetings and everything else. And everybody manages it different, but that's a big part of how I've been able to manage that in a way that's felt good to me and to my family.
For me, like you, I have four kids. Time flies, and that time is so important. And having you and your husband and any family around kids as they grow and go to the sporting events and all that is just so important in their development as well. And I know you even just recently spent spring break with your family at baseball. So I know your commitment to baseball.
Some people hear that and they just cringe. And I think there's no place in the world I'd rather be than watching them grow and succeed, sometimes through great challenges. But while the sports is great, I love what I see develop in them through the sports, resilience and growth and competitiveness, all the things that I look around and say are resident in the people that I most like to work with. And so I think a lot of that comes from sports and other extracurricular activities, if you will, that you do when you're growing up.
Well, Gina, I've really enjoyed this discussion today, and I think our podcast listeners are going to as well. Time to wrap up. Why don't we finish with, you guys are a new fund. There is a ton of capital in the marketplace, and I know that a lot of entrepreneurs and business owners are getting barraged with calls from private equity groups and investment bankers, as well as I'm sure insurance people. It's hard to even get on their radar. But if you're talking to a company that's looking for a partner, whether it's senior or mezz or some sort of a blend, what are the things that you really want them to remember this evening when they're sitting with their co-investor or their spouse maybe, that might delineate or differentiate you and tip them your way to be a partner as opposed to somebody else?
Again, I want to thank you for the opportunity to visit with you. It's been great fun. And I appreciate the chance to talk about our fund and our team. I do think we are unique, starting with the people that comprise our team. And I mean that the 4 partners and each of us having 30-ish years of business experience in this community and really developing both a lot of experience and expertise, but really importantly, relationships that we can bring to bear in helping companies. And that's what we love doing. And then the rest of our team, we're a small team, but it's incredibly talented, caring individuals that particularly love this part of the market. We like dealing with founders and owners and the people that are making the decisions about the business every day. And we always think about, in every meeting we have, if we're not the right capital solution and we aren't always the right fit, we still want to be helpful, whether that's helping the founder owner connect with someone else who is a better fit, or giving them some good advice, or making commercial introductions. We don't always have to win the deal, and to be helpful. And ultimately, that's what we want to do, is be helpful and create good things, good outcomes for people. When you do that, the deal flow and the opportunities come in spades. And so that's what we focus on, the big picture.
Well, that's awesome. Really look forward to watching you and your team have success over the next couple of years, and maybe at some point raise a second SBIC fund.
I hope so.
Well, thank you. Have a great day.
Thanks, Jeff.
Thank you for listening to North Star's Private Equity Fast Pitch. For more information about Fast Pitch or North Star's boutique heavy hitter events, you can visit us at enorthstar.com.